Hello and welcome. You're watching Buy Now Sell Now on ET Now with me, Vinny Motiwala, along with me, Shrishti Sharma as well. Shrishti, a very good morning to you as well. And markets, just nothing exciting that is happening today except for Reliance, where we are seeing Geo Financial Services obviously is coming into play over there as well. But how is the overall market setup looking like as of now?
Very good morning to you, first of all, Winnie, and good morning to all our viewers. And talking about the markets, they are seeing a bit of a consolidation in today's trading session, but the broader markets index has a lot of action. We'll come to that. But for the benchmark indices, Nifty is trading absolutely flat right now, 19,830 odd levels, what you are seeing on the index, while a bit of an outperformance from the Bank Nifty. Talking of some of the gainers, then Dr. Reddy's, after getting no observation from US FDA, this particular counter is in focus for their API Srikakulam plant. That stock is buzzing in trade, taking the Nifty higher and supporting the index as well with 2.7% of the gains. Reliance Industries, we'll discuss that in detail. But other than that, some of the other pharma stocks, Sun Pharma as well as Cipla, Divi's Lab, are in the top Nifty 50 gainers. But on the losing side, Infosys is under pressure after seeing a smart recovery over quite some trading days right now. Just ahead of the earnings, this counter is down about 2%. And some of the cement counters are also taking it on the chin. Ultratech Cement is the second top loser in Nifty 50. Autos, like we highlighted, that could be in the overbought territory. They are seeing a bit of a downfall, wherein Hero MotoCorp is in the list of Nifty 50 top losers. But talking about the broader markets, sugar stocks are buzzing in trade. Other than that, some of the stocks like Polycab, HPCL, Glenmark, Delta Corp are seeing good action. But in the Nifty, in the F&O losers, top stock is ABB. After ABB Global has come out with its earning update, where they have shared 7% growth guidance for the India outlook. So that stock is actually down more than 5% in trade today. So that's how the markets are panning out right now. But a lot of action in the broader markets. But Winnie, the big story of the day definitely continues to be Reliance.
Absolutely, and that's what we're going to be discussing today on the Buy Now Lens as well. And of course, the Reliance story, which went ex-financial today, while Reliance's share price was discovered at 2,580 rupees per share. Geo Financial Services is valued at around 261.85 per share. The special opening session when we saw it. Now let's go across to Somit, who's here to give us more details in terms of the numbers. How is it looking like currently, Somit?
Well, considering Reliance Industries' open price of 2,580, the implied value of Geo Financial Services stands at close to 261.85 rupees. Now, given the Geo Financial's book value would be around 200 rupees, the price to book of Geo Financial now comes at around 1.3 times. Now, at 261.85, Geo Financial would have a market capitalization of close to 1.66 lakh crore rupees. Now, this will be the 7th largest financial institution in India, and it will be ahead after when it comes to IDFC Bank, Bajaj Finance, SBI, Axis Bank. Now, 7th largest financial institution without any business, and that will be Geo Financial at 1.66 lakh crore rupees. Now, what Nuvama is saying is that they're expecting the listing of Geo Financial to happen in a 1 month's time. Now, post Geo Financial gets listed on the index, it will trade as a part of the index for the next 3 trading sessions, and post that it will be removed from the major indices like Nifty 50 and Sensex. Now, because of that removal, Nuvama is expecting some selling coming in from the passive index trackers, and for Geo Financial they're expecting a sell-off of close to 150 million shares, which would be around $465 million at a value of 261.85 rupees per share. Now, given the fact that Geo Financial has been demerged from Reliance Industries, the weightage of Reliance Industries on Nifty has also come down to around 10% from 11.1% that we had seen on July 19, and on Sensex, Reliance Industries weightage has come down to around 11.8% from 12.8% that we had seen on July 19. Now, what Geo Financial will be doing, it will be giving payment and lending services to consumers as well as merchants, and it also aims at entering the insurance, payment, digital broking and asset management business. And Geo Financials will be led by 2 ex-ICICI leads, that is KV Kamath, who will be the chairman of the of Geo Financials, while Hitesh Sethia will be the CEO of Geo Financials going ahead.
Well, thank you so much, Amit, for getting us all those details. So that's Reliance Industries that is now trading ex-Geo Financial. The stock did open post 10 a.m. at a price of 2,580 rupees, and since then it is seeing an up move. So let's try and understand what you should be expecting out of Reliance Industries in terms of move, as well as Geo Financial listing as per Nuvama is expected in the next 1 month. So what is the outlook going ahead? And to understand all of that, we are being joined by two of our experts onto the show. Let me welcome on board Kunal Bothra on the technical side, as well as on the fundamental take. Sneha Poddar, Assistant Vice President Research at Motilal Oswal, is joining us. A very good morning to both of you and thank you for your time. Kunal, firstly coming to you because you have been bullish on Reliance Industries, and post the listing or post the ex-Geo Financial trading, the stock has seen an up move that is moving up by 1.5%. So what's the take and what sort of a target should one be looking at Reliance right now?
Good morning, Srishti and everyone. My beliefs, and I think post the X of Geo Financial Services, technically we are almost at a new high or at a new high for Reliance Industries. Now, I think the way in which the stock had rallied in the last 15 odd days, start of the July series from 2580, 2600 odd levels towards 2800 plus mark, where we closed yesterday almost on the verge of new high for the stock price. I believe it's been a phenomenal comeback for the stock price. I'm expecting that post the demerger, the stock should actually get into a stable trend. So I don't expect any immediate price uptrend for Reliance Industries over the very near term. I think this 2600 mark, 2660, 70 approximately could be a broad range for the stock price, and I think it should meander into this range at least for the next 2 to 3 weeks. So for short-term trader, I would not initiate any fresh buy on the stock at current levels. But I think in case if it dips down and say corrects marginally 50-40 rupees from current levels, that could be a good contra buying opportunity. But the net view for Reliance Industries remains extremely bullish.
Right, Kunal. Net view remains extremely bullish on Reliance. Sneha, very good morning to you as well. And I'm going to ask you, how is it looking like for you in terms of Reliance? What are you seeing fundamentally also? How are you viewing it now?
Sure, good morning. So Reliance Industries, as Kunal mentioned, probably we won't see any large up move in the near term. Now, the reason being, we are not expecting a very great Q1 from the company. The results are expected to be a little muted. So probably that would keep the up move capped. But from a long-term perspective, we are really positive on the company, given the huge potential that the company would be unlocking from the Reliance Jio as well as the Reliance retail segments, and the clean energy, segment that the company is really bullish on, and which is yet to take a proper shape. So that would be a key unlocking potential for the company. So from a long-term perspective, we are really positive. In the near term, probably the stock might stay range-bound given the muted Q1 numbers. But as the development from the Geo Financials would start coming in, probably we might see some spike in the prices in between.
Okay, thank you so much for that word coming in on Reliance Industries, both Sneha and Kunal. But do stay on with us because we're going to sip into a short break. And after the break, viewers, we'll be taking all your stock-related queries. So don't go anywhere. Welcome back, and you're watching Buy Now Sell Now on ET Now. Now we'll get started with all your stock related queries, and to send us your queries, you can send us your queries on the WhatsApp number that will be flashing on your screens, or even on any of our digital pages like Twitter as well. So do start sending us your queries, and to solve your queries today we have Kunal Bothra as well as Sneha Poddar joining in with us as well. And Sneha, the first query I have, this one is from Bisakha from Kolkata, and they want a vision of almost 2 years time period holding. That is what they have. Can they buy ABB as well as Indian Hotels and Indigo at the current levels? Any of these, would they look interesting to you or appeal to you at the current levels for 2 years?
Yeah, ABB and Indian Hotels can be the two stocks which can be held from a long-term perspective. In fact, recently the reports had come that the Indian hotels are likely to touch the occupancy rate of 70%, which is the highest in a decade. This shows a huge potential that these hotel companies have, and the kind of effect that would have on their profitability. So Indian hotels definitely buy from a long-term perspective, and ABB also can be held given the huge capex upcycle that we have entered into. So definitely ABB also becomes a hold from a long-term point of view.
Okay, moving on, and Kunal, coming to you for this query. This question is from Tushar from Delhi, and he wants to know that is this a good time to invest into Imami Limited as well as JK Paper for a medium-term perspective?
So JK Paper, you can consider buying now. It's about going contra at current levels because the stock has gone through a sharp correction in the last 3 months or so. So I think at current levels you can start nibbling in because the risk reward to enter would be a lot more better. Even for Imami, I think the stock is recovering. It's now hanging around the 200 moving average. I think over the last 3-4 weeks, the stock has been trading just closer to its 200 DMA. So which means that the stock is consolidating at a higher level, trying to move up the range for itself. So even that could be a good buy. But I think JK Paper could be a slight high risk bet if I have to determine it that way. And Imami could be a low to moderate risk kind of a bet.
Sneha, the next query is again a couple of queries coming in together. That is from Sandeep from Tamil Nadu, and they want your view on IRCTC because they've entered in IRCTC recently at an average price of 620 rupees, as well as Federal Bank at 131 rupees. For a 2-year time period holding, is it good and should they continue to hold it?
Okay, IRCTC can be looked at from a long-term perspective, given the kind of potential that is being seen in the railway stocks. However, there's a kind of a little risk involved with the stock. It has multiple business verticals, of which they just one or two verticals which is performing well, while the other verticals are kind of acting as a drag. So IRCTC, I would ask the investor to take a calculated risk. Federal Bank can be looked at from a long-term perspective, given the kind of strong results that the bank has been posting quarter after quarter, and the kind of cleanup that they have done in their balance sheet. That really speaks about the bank. So it's a good mid-size bank to take a look at. It would be a slow and steady kind of a compounder for the investor. So probably not a very high up move you can expect, but then definitely a good portfolio stock to accumulate.
Okay, moving on to the next question. And Sneha, coming to you for this one. This question is from G. Mani Raju from Chennai, and he's a senior citizen and wants a long-term view, maybe for the next 3 years on IDFC First Bank. At this point in time, now that the viewers know what is the swap ratio, is this a good time to invest into IDFC First Bank, and what should be the price target as per you going ahead?
Okay, we are quite bullish on IDFC First Bank because the bank has seen very strong phase of loan growth, and it is actually reducing its drag from the wholesale book, and it's entering into a phase wherein it's strengthening its retail holding. The bank holds a lot of potential, and we believe that it's one of the best bets among the mid-sized banks, with a very strong kind of AUM growth and the earnings profitability that we're estimating over the next few years. The kind of target that we are looking at currently is around 110, 120 from the 1-year perspective, but it really holds potential for next 3 to 4 years.
Okay. Kunal, this one is coming in from Imran, and this one is on Adani Transmission. They want to know that can they buy Adani Transmission for a time period of 3 to 9 months?
I would suggest not to. The stock is still reeling under some major selling pressure. So the stock was almost at 2,000 plus or 3,000 plus levels in the month of January. It's corrected now sharply towards 780 approximately. So I would believe that the charts for Adani Transmission looks extremely weak, and the fact that the stock is reeling below even its 50-day moving average as well as the 200-day moving average by a huge margin tells you that the stock would be under some selling pressure for some more time. So I think it's better to avoid this kind of a stock as of now. If you're looking to park money into the Adani group of names, then I would probably prefer Adani Enterprise, Adani Ports, Ambuja Cement, as well as Adani Enterprise in that order.
Okay, Kunal, the next question is from Hemanta from West Bengal, and what he's holding is 140 shares of Sterling and Wilson Solar from a price of 335 rupees, near about the current market price, and the other one is eMudra, 64 shares from a price of 477 rupees. Both these counters have seen a great move in the past 1 month, so going ahead, should he expect some profit? He wants a short to medium term view on these.
So for SW Solar, I think you can hold on to the stock. Just last 3 or 4 days, we've seen the stock moving up from 320 to now I think 355, 360 plus levels. So which means the momentum is back on the side for the stock price. I would expect the stock to move up higher a bit more. So I think 375, 380 broadly could be a very near-term target which you can keep for SW Solar. For eMudra, on the other hand, I think it could be a good time where you can look to book out profits. So if your buy price is lower than the current market price, then I think either you can trail the stop loss to 470 for the stock or look to exit at current levels, because the stock is seemingly showing signs of a fatigue at current levels. So there could be a mild consolidation as well as a correction which could combine to the stock price. So I would suggest to book profits.
Sneha, the next query is on Nika. This one is from Manohar from Andhra Pradesh. Now, they're holding Nika 200 shares at 132 rupees per share. For the long term, what should they be doing? What is the suggestion coming in for Nika now?
Sorry, we don't have coverage on this stock.
Kunal, do you have any coverage on this one for Nika?
Well, I would suggest to hold your purchases if you are looking to buy. I think only on a confirmation about the 200 DMA for Nika, which I believe is closer to 150 marks, so maybe plus or minus 1 or 2 rupees for the stock price. That's the breakout point for the stock price. So it's recovered from 120 levels in last 3-4 months, but it's unable to break past above a major resistance. Now we've seen many a times that stocks, they actually go into a rally or a bounce, but they fail to break out of the long-term averages and they succumb to selling pressure yet again. So I hope that's not the case this time around for Nika. So that's why I would probably wait for a confirmation, and that could happen above the 200 DMA, which is 150 level. So would suggest a buy only above those levels for the stock.
Okay, Kunal, what's your take on Canara Bank? Because you have been bullish on all these PSU banking names. So Yoga Rani wants to know that can she enter into Canara Bank for the 6 months period, or should wait for some correction and then enter?
Well, I would suggest to start looking at this trade at current levels and look to buy on dips, because these PSU banking stocks, they are by technical nature, they are a high beta. So which means that every now and then these stocks can on an average go into a 3% to 5% kind of an average correction. Sometimes the correction could be a bit steep into these names. So you can start buying at current levels and then wait out for these corrective phases to pan out. And then every 5% dip, for example, you can start adding some more quantity for the stock.
Sneha, this next one is coming in from Mahalakshmi from Hyderabad, and they have 80 shares of Tata Elxsi. They're holding it since a long time and at a price around 2,240 rupees per share. Would you suggest that now they actually maybe book some bit of a profit right now and look to buy something like a persistent system and Sula, some partial profits if they book? Would you be suggesting that?
Alexi, because somehow the ER&D space is seeing some kind of slowdown. So it would be better to book partial profits and get more clarity over next few quarters how the growth potential pans out. And then probably if the growth returns, one can again enter at those levels. It would be better to look at the large cap IT space if one really has to take a bet, because there the comfort is much higher. So I would suggest to look at TCS or Infosys, because that's the best companies to bet on in the IT space, and the kind of order book that they have. So the risk reward is much favorable in those counters.
TCS and Infosys are the top recommendations from the large cap IT space from Sneha. But Kunal, the next question is on Indian hotels. Viewer named Kamal from Delhi. He's a senior citizen and has bought the August futures of Indian hotels from a price of 405 rupees. At this point in time, should he book loss or wait for some returns?
So 405, which means I think if I'm not wrong, you've just bought it yesterday or today, because today's price is higher than 405. I'm not sure of yesterday's price for Indian hotels. Now, I would suggest that you can probably hold on to the stock as of now. The indicators have started to come positive for Indian hotels, but since you've bought in futures, I would recommend a stop loss which is a bit deep from current levels. I think closer to 388 could be an ideal stop loss on the trade. So either you can hedge it with a put option for at the money, which is 400 strike, and hold on to the stock. In case if the stock dips and say falls below the 388 level, that's where I would suggest to exit the stock.
Sneha, we have Satyan who wants to know that Gail, at the current market price, is it an attractive time to enter this one for a period of 2 years?
Sorry, Mrs. Stock name once again.
Gail.
Okay. Gail, I would suggest not to look at from the long-term perspective. From the short-term perspective, probably he can look at entering the counter because actually the LNG prices are quite volatile. So from a long-term perspective, it's better to avoid the oil and gas sector. In the near term, however, we are expecting some improvement in the volumes. So he can take a short-term bet in this counter.
Okay, Kunal, one more query on the PSU banking name. The question is from Ravi and he has entered into Union Bank from a price of 78 rupees. He wants to know the short-term targets on this one.
So I think 92, 93 could be a short-term target which you can keep for Union Bank. So the closer it is towards that level, so maybe at 90 plus levels is where you can look to start booking profits at say every 0.5% to 1% for the stock price and trade your stop losses accordingly. So since you bought at lower levels, you should not lose the advantage of riding onto the stock as well as booking your profits at the right time. So just closer to 90 odd levels is where you should look to start booking our profits if it's a purely short-term trade.
Kunal, one more query that is coming your way. This one is from Lakshmi Narayan from Chennai and it's on IOC. They want to know, can they look to buy IOC at the current price for a period of 6 months?
I would suggest so. I think IOC, HPCL, BPCL, the charts for these three key names, the OMCs, I think they're looking fairly attractive. We've seen 3 or 4 months of a steady recovery for a stock like IOC, which I think has rallied from 65 levels to now on the verge of breaking above the 100 mark for itself. So the recovery is quite strong, it's sturdy, the stock has given a confirmation of a 1-year breakout. So chart patterns are quite positive and I would suggest that in that regards you can go for a buy on IOC.
Okay, Kunal, the next question is also for you. This one is on Sinjin International. Jay Krishnan has bought 104 shares, very near to its current market price. 779 is his buying price. Wants to know the short-term targets on this one.
So, the chart patterns are a lot more stable for Sinjin, but it's just that on the monthly charts, it's a lot more attractive because if I'm not wrong, the stock has come out of 2 years of consolidation. So the entire 2021 as well as 2022, the stock had remained sideways in a band of 550, 650, so 100-point band. And I think the stock has now given a breakout above that 650 plus mark, now almost at 100 plus points from those breakout levels. So your entry is a bit late for the stock, but then as I said, that the breakout is more on the monthly basis. So the outcome would also be effective more on the long-term charts. I'm not sure from a short-term view, maybe an 800 could be a near-term target which you can keep for Sinjin. But if you can extend your time horizon to 1 year plus, then I believe that you can potentially keep a target of 950 to 1000 as well.
Okay, so that's the take coming in on Sinjin. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. Welcome back to Buy Now, Sell Now, a show where we get you answers for all your stock-related queries. And to guide us better, we have Kunal Bothra as well as Sneha Poddar with us onto the show. And for the next query, Kunal, I have to come to you. This is on Bector's Food. Geeta from Dubai has bought the 850 shares from a price of 400 rupees. So at this point in time, should she sell this particular counter or wait for more returns?
I think you should wait for more returns. You've been patient enough. You've been holding on to the stock. I think it's given you returns of almost 90% to 100% from your initial cost price. I don't see any reason why you should be exiting the stock because what's actually happened is that the stock has gone through a consolidation and the mean reversion has also happened. So surprisingly the prices have not corrected very sharply for Bector Foods. So you rarely see such kind of a chart combination where even in the consolidation the indicators retrace but the prices have not retraced, and I think that's ideally a good sign for the stock price. The only concern is that how long can this consolidation last for Bector Foods? That's very difficult to track as well as preempt, but I believe whenever the consolidation ends, the stock should start off a new uptrend and possibly head towards even the 4-digit mark. So I would suggest a hold.
Okay, moving on to the next question then, and a lot of queries for you, Kunal. But let me take this from you, Sneha. I'm not sure whether you track nilcast because Subramaniam from Chennai has bought 150 shares from a price of 98 rupees. So wants to know the outlook going ahead. Any view?
Sorry, we don't have any view on this counter.
Okay, Kunal, onto the charts. Anything that you can guide him?
So I think if you've already bought, then I think you should continue to hold on. If you're looking to buy, you can consider buying at current levels because it's at a cusp of a breakout. Now, the only thing which is exciting about the charts for nilcast is the last 3 or 4 days back, the major volumes which had spiked up into the stock price. The last time we'd actually seen such kind of volumes was actually on a downtrend for nilcast, and that was closer to 95 levels. From there, the stock corrected to 86 or 87 mark, which means this time around, in case if it's a reverse phenomena, then the stock should rally to at least 110, 112 mark from a short-term view. So I would suggest a buy or a hold, given your stance as well as a position on nilcast.
Now the next query is on Oil India. Anand from Hyderabad has bought 100 shares from a price of 257 rupees. So at this point in time, should he continue to hold on or move out of this counter?
Okay. So, Oil India, one can actually expect to hold at this level because the oil prices are quite steady, and probably we might see a slight up move with regards to oil price, given the tight supply from the OPEC countries. With that respect, one can actually hold on to this counter, and even these oil and gas companies are expected to report decent set of numbers. So probably the stock might be in action in the near term.
Kunal, the next one, and this one is from Anu from Gurgaon. They are holding 25,000 IDBI shares at 59 rupees per share. For the short term, what should they be doing? Continue to hold this or maybe look to sell now?
See, I don't expect anything material on IDBI Bank over the short term unless the stock has some kind of a news flow. The only concern with IDBI Bank is that it's dependent too much on the news flow as compared to the other PS banking stocks, which are actually going into an uptrend for themselves on the basis of their charts, flows, events, fundamentals, etc. So that's the only concern with a stock like IDBI Bank. Short term wise, I don't expect anything major to come out. So you can probably take a call that exiting the stock at maybe current levels or closer to your cost price and then switching on to some other name if it's purely a short term trade.
Okay, Sneha, the next query is from Pradeep. He's a senior citizen and has invested in 2 counters at a very attractive price. Firstly is LG Balakrishnan. He bought 20 shares from a price of 703 rupees. And the other one is Zen Technologies. 100 shares bought at a price of 201 rupees, sitting at a stellar gains in both of these. So what to do? Can he continue to hold on to these counters or book profits in these?
Actually continue to hold both the counters because both are actually the kind of business potential that is being seen in both the counters is really tremendous. When we talk about Zen Technologies, the company is in the defense space wherein a lot of action is happening, and the kind of guidance that the management has been giving out recently. So we believe that the stock should do well. With regards to LG Balakrishnan, it's a good auto and company to be present in, and the auto upcycle continues to be pretty steady and healthy. There's a tremendous opportunity for the company going ahead as well, and thus both the counters I would suggest to stay put.
Kunal, this next query is on UPL, and this one is from Shankar, and they want to know that is it a good time to enter UPL, whether you look at it in the short term or the long term view?
Well, I think it's been one of the stocks which I have been unable to comprehend on the charts, frankly, because every time the stock gives you gives a technical breakout, it fails, it goes into a correction. Every time it looks weak on the charts, and there's an opportunity to go short, the stock reverses. So it's been frankly a stock which has been a huge underperformer, as well as has a tendency of giving a false breakout. I would frankly avoid recommending a stock or a buy at current levels even for UPL. These are the stocks which you should avoid when it goes into those odd phases of correction, devoid of how the markets have been over the last 2-3 months. So look at it this way, that UPL is, I think, if I'm not wrong, almost at a 52-week low as compared to most of the other peers, as well as the overall market being extremely strong. So why invest in this kind of a name where you can wait out for a breakout? That would be a good confirmation rather than buying on dips.
Okay, so that's the take on UPL, but on the bottom of your screen, you will see the flashes on ABB Group because ABB Global has come out with its guidance wherein for calendar year 23, they anticipate comparable revenue growth wherein the India business has seen a strong bit of a resilience, but they expect the EBITDA margin to be above 16%. So that's the India business that has seen a growth, but going ahead, they expect an order inflow of 7%. On the back of this, ABB India is actually seeing a fall of around 5.5% in trade right now. Well, moving on to the next query then, and Kunal, this query is on AB Capital. Indu wants a technical view on AB Capital. He needs to know at what levels can he add more in this one.
So my stance is bullish on AB Capital, and I think if you're looking to buy, I would actually wait out for maybe another week or so. So I'm not sure of the price correction which could happen to the AB Capital because I'm actually waiting for the RSIs to dip back towards sub 50 mark. So I think maybe closer to a territory of 40, 45 for RSI could be a good level to dip into the stock price. That's actually been a major low or a support for the stock price. So sometimes you look out for price support, sometimes you look out for indicator supports. In AB Capital, the charts, the indicator supports have actually worked out pretty well. So maybe another week from current levels. And in case in terms of price wise, maybe closer to 175, 178 could be a very good price to buy the stock.
Okay, let's move on and talk about Viatech Wabag, Inox Wind and Adani Green Sneha. Vishal from Dubai wants to know, is it a good time to enter these stocks for the long term?
Viatech Wabag, he can definitely enter from a long-term perspective because a lot is happening on the water side, water recycling side. So Viatech Wabag definitely. Adani Green, I wouldn't have any view. And what was the third counter that you said?
Inox Wind, Sneha.
Inox Wind, definitely it can be held because the kind of traction which is being seen on the wind energy side, so there's a lot of potential. It would require some kind of patience and long holding for next 4 to 5 years to actually reap benefits, but it's a good bet to take on.
Okay, Kunal, the next query is on Moltech Packaging. NVS Sarma from Vijayawada has bought these shares from a price of just 100 rupees, and it was, I guess, back in 2015 around those years we have seen such a price on this particular counter. Now sitting above 1,000 and at a lifetime highs, he's holding 1,000 shares. So what to do next? Expect for some more returns?
Yeah, you can expect more returns, and I don't see any reason why you should be looking to book out profits because you've made a substantial gain on your investment. The stock has done reasonably well. Even in the last 3 years from 2020 lows, the stock has, I think, gone up 4x or 5x from 200 or 225 to almost 1,000 plus levels where it's trading right now. So I think in that regard, it's a stock which has continued to do pretty well on the long-term basis. Don't see any reason why you should be selling, except for the only fact is that the stock is illiquid. The daily average volumes for the stock price, I think, is around 5,000 or 6,000 shares. That's the only concern which emerges, that you can't have a higher exposure into these kind of names because of the lack of volumes or the illiquid nature of the stock price. But other than that, I think the chart patterns are a lot more better. You can continue to hold on.
Sneha, Renuka Thomas from Trivandrum wants to know a banking name that you would look at right now or you would buy that could go on and someone could hold on for a long term. What would that be?
So there are a couple of names in the banking space that we're really positive on. One is HDFC Bank or ICICI Bank. Both are very good bets. If we talk about HDFC Bank, so post merger, it has really it's expected to emerge really stronger. So we are really positive on HDFC Bank. ICICI Bank continues to do well with the kind of the digital initiatives that the bank has taken. From the PSU banking side, we would recommend SBI, which has really strengthened its balance sheet and the kind of value unlocking potential that the bank has over next few years. So probably these three banks I would suggest from the large cap space, and as I mentioned earlier, from the mid cap space, we really like IDFC First and Federal Bank.
Sneha, once again a query for you because this query is from a viewer. I don't get his. Okay, his name is Sagar, and he wants to know a fundamental view on the paint industry and specifically ExxonMobil. He's been holding the shares from a price of 2,000 rupees. So at this point in time, should he book profits? And given the kind of competition that is building up, how do you see ExxonMobil winning? And any target price that you have on this one?
Okay. Exxon Mobil, as such, we don't have any coverage, so I won't be able to give any target price. But I would say that if he has to play the paint industry, then it would be better to stick to the largest player, which is Asian Paints, because given the kind of competition that is heating up in that counter, there would be massive pressure that we might see on the pricing front, and thus it's better to stick with Asian Paints, given the kind of the kind of distribution network that they have. This company and the market share that they enjoy, so they would be able to actually counter the competition in a much better manner. I would suggest to switch to Asian Paints and book out of AkzoNobel.
Okay, on that note, viewers, we're going to slip into a very short break, but don't go anywhere because we'll be back and we will be continuing with all your stock related queries. Welcome back, and you're watching Buy Now Sell Now on ET. Now let's keep it going with all your stock related queries. Sneha, the next one coming your way, and this one is from Ritu from Delhi, and it's on Relaxo Footwear. They're holding 29 shares of Relaxo at an average price of around 1,095 rupees per share. As a long-term investor, what should they be doing with this? Should they continue to hold it?
Okay, Relaxo, I would suggest one can actually hold on to the stock. However, the valuations are pretty rich. The stock might not give a very large kind of up move. It might be a very slow and steady kind of move that we might see. In the footwear space, I would actually recommend to look at probably Metro or Campus, which are much better players, and the growth potential is much faster over there. So I would suggest both those counters.
Okay, Kunal, Suresh wants your view on Mazgaon Dock. He's been holding 50 shares from a price of 1,377 rupees, and there has been no stopping for this particular counter. Today itself logged at an upper circuit of 5%. Wants to know, can he buy more at this point in time, and what to do next?
I think you can continue to just hold on to your existing quantity. I would not recommend a buy or an add at current levels because of the steep divergence the stock has seen from the long-term view. Because I think at current levels, the 200 DMA for Mazgaon Dog is at 800 and the stock is at 1800 levels, which means a divergence of more than 1200% for the stock price from its long-term averages. Such kind of divergences, they don't sustain for too long. So I think I would recommend to just hold on to the stock. If possible, you may look to book profits at every marginal rise the stock sees from current levels.
Okay. Sneha, the next one we have is from RK Ahuja, and they want to add around 4-5 lakh rupees to their portfolio. And they're looking at some of the names in the pharma and the IT space. For the long term, could you suggest a couple of names from here?
Okay. From the pharma space, he can probably look at Sun Pharma and Max Healthcare. Sun Pharma has a very strong portfolio of specialized chemicals. And it has the kind of presence that it has a niche portfolio that it has built in the US market. It is doing tremendously well. So Sun Pharma is one counter. Second would be Max Healthcare. The overall hospital space is doing good. Post-COVID, it was expected probably that the demand would might take a hit, but then the demand has further strengthened from here onwards. And given the kind of capex that the hospitals have put in place to tackle this demand, it is the overall hospitality space is doing good, and within that we like Max Healthcare. If we talk about the IT counter, so as I mentioned, TCS would be the best bet among the large cap IT space, given the resilient order book that they really enjoy. Among the mid cap IT space, probably one can look at Coforge because or Cyient. Both these counters have been doing pretty well. Their results have been pretty decent with regards to its peers.
Okay, Kunal, the next question is on PNB. Manjunath wants to know the 6-month stock expectation from PNB. He's been holding these shares from an average price of 58 rupees, sitting at a profits right now. What to expect next?
So from a 6-month view, I would say expect 70 to 78 kind of a range for PNB. And again, I think it all depends on how quick and how fast these stocks can actually provide the breakout for themselves. So many of the PSU banking stocks have given a breakout. Indicators have started to come into positive on the monthly charts for many of these PSU banking names. So I believe it could be it could be the way in which how the markets also shape up. But I think on a conservative basis, 70 to 78, 72 to 78 could be a target range which you can keep for PNB.
Okay, and on that note, let's get started with the rapid fire then. And Kunal, the first one your way, CCL products for the long term. Dr. Jayakishan wants to know on technicals, how is it looking?
So I would suggest a buy at current levels for CCL.
Okay, Sneha, any of the picks from the power sector, be it Power Grid, NTPC, Tata Power, Adani Power, with a 1 to 2 year investment horizon?
I would suggest NTPC.
Kunal, the viewers holding 50 shares of Havells at 1,382 rupees. What should they do?
Hold on to the stock.
Sneha, any take on Rainbow Children? The viewer named Mahesh is holding 300 shares from a price of 542 rupees.
It can be held from a long-term perspective.
Kunal, Ujjivan Small Finance Bank, 10,000 shares is what the viewers holding at 33.8 rupees. Continue to hold or sell?
Continue to hold.
Kunal, Monish wants to know the 1 month target for Indigo Paints holding these shares from a price of 1,650 rupees.
I think 1,600 could be a nominal target for the next 1 month.
Sneha, for the long term, is it the right time to actually invest in India Grid Trust?
I would suggest avoid.
Okay, Sneha, what's your view on Balrampur Chini? Dev currently has 3% profit in this one. Continue to hold on or book profits?
From the near-term perspective, probably he can continue to hold. However, the sugar prices have corrected recently with the better monsoon coming in. But definitely not a hold from a long-term perspective.
Kunal, Deep from Dubai is holding 1,000 shares of SBI cards at 850 rupees. Should they hold or exit?
I think they should continue to hold on.
Okay, Sneha, Vinay from Mumbai has bought 1,000 shares of IRB Infra from a price of 24 rupees. What are the prospects of this one?
I would suggest to switch out from this counter to better names such as HG Infra or PNC Infra. One can also look at Capacit Infra.
Sneha, Vinod from Gurgaon is holding 200 shares of Bandhan Bank at 242 rupees. For the long term, continue to hold or exit?
Exit from this counter.
Okay, but with this, viewers, we are completely timed out in this edition of Buy Now, Sell Now. Thank you so much, Kunal and Sneha, for joining us today and helping all our viewers with their stock-related queries. But with this, viewers, it's time to wrap this edition. It's a goodbye from me and Winnie and the entire team who put this show together. Thank you so much for watching.